Welcome to DeFi Crypto Today. Our topic today is how Warren Buffett and Charlie Munger fell off their rockers. Alright, so the video today is a little bit long. So if you want to skip ahead for some parts, look at the timestamps below. I'm explaining a lot of things, why Buffett doesn't like Bitcoin and what to take from that. I'm also going to explain his investment strategy. There's some very excellent points in his investment strategy. But honestly, I think he's stupid for totally ignoring Bitcoin and trashing it the way he's been doing it for the last few years. And Charlie Munger as well. Okay, those guys should know better than talking trash like this. Okay. And we're going to explain this in great detail, so that's why the video is a little bit long. Anyway, so recently, May 2nd, Warren Buffett had his annual Berkshire Hathaway shareholders meeting, which is a very popular event, actually. And typically, he brings some words of wisdom to the investment community. And what he said is that you wouldn't buy all the Bitcoin in the world for $25. It doesn't produce anything. And we're going to go further into his comments to understand the details and all of that. He doesn't like Bitcoin. And we're going to try to figure out why he doesn't like Bitcoin and see what we can make out of this. Is Bitcoin really a terrible investment, as Warren Buffett thinks, or is did Warren hurt his head when he fell off his rocker? So well, let's have a look. All right. So yeah, this is the famous meeting. You can watch. I'm putting all the links for all these things in the description, so you can listen to him and watch his whole discussion about Bitcoin and blah blah blah. So we got Warren here and Charlie there. They do look alike a little bit, don't they? Anyway, so let's talk first about Warren Buffett. Warren is a very successful investor. He's one of the most successful investors in the world. He is worth today about $116 billion. Okay. And so he's the sixth wealthiest person in the world. So you'd think he would know about investments, but for some reason, he hates Bitcoin. Now, the thing is, we got to understand his investment philosophy before we judge him too harshly. But, and this is what his principles are. And for the majority, I totally agree with him. Okay, so these are very important. Let me highlight them for you guys so it's easier for you to see. So I think everybody should follow this. Okay, so these are really good things that Warren Buffett has been preaching for at least 50 years. Okay, if you can't hold your investment for 10 years, don't hold it for 10 minutes. This guy is a long-term investor. Okay. Most of the companies he invests into, he stays with them for a decade, as he says, okay, or a really long time, okay, several years. Diversification is for losers. This I'm kind of not. I don't really like this one as much. His point is, don't diversify just for the sake of diversification. That's what he means here. If you've got a really good investment, well, you should maximize your investment in that product, okay, or securities or whatever it is, okay. So for instance, right now he's buying Occidental Petroleum and Chevron because he thinks the price of oil is going to skyrocket, okay. On top of that, Chevron right now gives a really generous dividend of about 3 point something percent, and which he says is better than what he's getting at the bank, because getting nothing at the bank if he deposits money there. On top of that, Chevron is having a very aggressive stock buyback program. So that means that the price of the shares are going to go up at greater than 3.5%. So his earnings should be over 3.5% just by holding Chevron. So that's very good. Occidental Petroleum also has a buyback program, a generous dividend, and they're making a ton of money right now, especially because the price of oil is going up. Okay, so he's putting large chunks of money in there. We're talking tens of billions of dollars in the oil industry at the moment because he's a big believer in that sector right now. Now, this is the part that I think is crucial here, and that I think is the part where that makes us understand why he hates Bitcoin. Never invest in something you don't understand. Warren Buffett, for all his wisdom, does not understand shit about Bitcoin. He doesn't. Warren Buffett is known to be a technophobe. Okay, it took him forever to invest in high-tech stocks like Apple and Microsoft and other big high-tech companies. It really took him a very, very long time. And he could have bought Apple way earlier. That's actually one of his regrets, okay? He said that he should have bought Apple a lot earlier, all right? He's one of the largest shareholders of Apple, and Apple is one of his largest holdings at Berkshire Hathaway. So he's very slow when it comes to technology. He doesn't quite understand it very well, and it takes him a lot of convincing before he decides to invest in technology. Now you got to understand also that the S&P 500 has been doing very well in the last decade or so. And most of the gains came from the high-tech sector. We're talking Apple, Google, Microsoft, Tesla, and so on. Okay, those without the high-tech sector, the S&P 500 would not have done as well as it did. Okay, so most of the gains in the last decade came from the high-tech sector, which typically Warren Buffett avoids, except for his investment in Apple at the moment. I think he also owns Microsoft. I would have to check that. So most of the time he invests in traditional industries. He's mostly investing in insurance and banks and railroads and things like that. Okay. Nothing too fancy, nothing too high tech, typically. All right, and I think that's why he's not investing in Bitcoin. He doesn't understand it. He doesn't understand what the heck that's about. He understands some of it. We're going to see that, but he doesn't understand the benefits. He only sees the negative side of it. Okay, I really like this one. If you can't handle 50% dips, investing is not for you. I keep seeing that all the time, okay? People buy tokens at the high point, okay, and then the market crashes 50%, 70%, or 90%, and then they go, oh my God, you know, like, I just saw it last week. DYDX, okay, was tweeting something about some nonsense about rabbits, that they like rabbits or whatever. And then you had all these investors that were commenting, what the hell are you talking about rabbits? Why can't you help us when your token is tanking and everything? The market controls the price of the tokens, not the people that work at DYDX. Okay, get that into your thick little head. It doesn't matter. Okay, DYDX is doing very, very well. Thank you very much. Okay, it's one of the largest decentralized derivative markets in the world. Okay, it's minting money. It's making money hand over fist through the fees that they collect on transactions. Okay, so if you hold the DYDX token, hold it long term. If you can't hold it for 10 years, don't buy the darn thing. Okay? DYDX is very well positioned. I'm pretty sure they're going to be last at least 10 years and probably much longer. They're probably going to take a very large chunk of the derivative trading market, decentralized trading market on the blockchain. Okay, so I'm positive. Okay, personally, that would be a long-term investment for me. So again, if you get nervous when you see the crypto market or the stock market tank, don't invest. Buy something else. I don't know, real estate. Maybe that's less scary for you. Be fearful when others are greedy and vice versa. What does that mean? What it means is this. This is the current Bitcoin fear and greed index. Right now we see extreme fear. What would Warren Buffett do if he liked Bitcoin? Let's say magically he changes his mind. Okay, maybe he watches this video and says, "Oh my God, Chris is right," and it's never gonna happen. But let's imagine, a parallel universe where this could happen. That's possible. So we have Warren Buffett in a parallel universe looking at the Bitcoin fear and greed index, and he says, "Wow. Extreme fear. Time to buy Bitcoin." That's how Warren Buffett thinks, okay? When he sees blood on the street, when he sees people fearful of investing, okay, in a particular stock, in this case mostly stocks, he doesn't like crypto obviously, he jumps on it. Hand over fist, he just throws cash at it as fast as possible. And that's what he's been doing with Chevron and Occidental Petroleum lately. Okay? He thinks it's a perfect time to buy in that sector. Okay? Why? Because it's extreme fear. That's how he thinks. When the dial goes the other way around here, he sells. That's when he sells. For a while, he thought the stock market was overpriced in 2020, 2019, 2020, and early 2021. It was like, oh my God, the stock market is overpriced. Okay, and he kept selling. Okay, he kept selling. Okay, so what he did, he built up a huge cash war chest, okay, and right now he's looking around and saying, time to buy this, time to buy that, and so on. So he's on a buying spree right now. He's shopping like a kid in a candy store right now, okay? So he's getting his Werther's originals and and so on. All right, next. No should be your default answer when considering investment options. So there are tons and tons and tons and tons of investment options in the crypto world, okay? 99% of them are worth shit, okay? So you should say no to most of the new projects. And I'm not just saying that to be negative, it's a fact of life, okay? There are lots and lots and lots and lots of people that create new projects every single day on crypto. Most of them will fail. It's just a fact, okay? And the crypto project, think of it as a business, okay? It's a well-known fact that about 80 to 90% of all businesses fail within the first 5 years, okay? And especially most likely during the very first year, okay? The vast majority die in the first year, okay? And some survive, and gradually there's less and less and less of them after up to 5 years, okay? Those that survive 5 years typically have a good chance of remaining, okay? But if most projects, look at them with a very critical eye, okay? And try to see what's wrong with them first before jumping on board. Okay, that's what I've been trying to teach in my videos, okay? Try to be prudent. It doesn't mean because it's got a 1,000,000,000% APY that it's going to be good, okay? It's not going to last. It's impossible to maintain a 1,000,000,000% APY for very, very long, maybe a couple of days at the most. Okay, so watch out for that. Okay. Also, try to figure out if the project has any security features. Like has the team been KYC'd? Is the code audited? And most importantly, okay, is there a multi-sig to control who takes the money out of the wallet? You need that. That's the most important one. Okay, and here the best strategy is to do nothing at all. So for him, it's like if he's got his portfolio set up, okay, and it's working right now, okay, best thing to do is do nothing. Just wait until you see a really golden opportunity. And right now, that's what he's seeing. He loves this kind of market right now. He loves when the market's crashing because he finds bargains. Okay, that's his investments philosophy. So this works pretty well, and it works also with crypto. It works with stocks. It works with crypto. It works with most investments. Okay, so for that, I can say I'm a Warren Buffett fan. I'm not a fan of his when he talks shit about Bitcoin. So let's have a closer look. Now, I wanted to also demonstrate how good an investor he was. Okay, was. Not are. Not is, sorry, but was. So if you started investing at Berkshire Hathaway about 50 years ago in 1964, and you put $1,000 in there, today it would be worth $26 million, which is pretty good. Okay, that's better than the S&P 500. If you invested $1,000 on the S&P 500 in 1964, today you would have $312,000. So it's much, much, much better. Okay, but most of the gains happened a long time ago at Berkshire Hathaway. During the last 10 years, he's not doing so amazingly great. Probably because his portfolio is so huge now. Okay, you can't buy a company for just a few $1,000,000. He has to buy multi-billion-dollar companies. Okay, because he's got way too much cash. Okay, and it's difficult to make big, lucrative deals of that size. Okay, and still outperform the S&P 500. If we look here, let's say you decided to invest $1,000 on Berkshire Hathaway stock and S&P 500 stock at the same time in 2011. Okay. You notice that the red one is Berkshire, the blue one is the S&P 500. You're pretty much at the same place in this is 2020. So if you invested for the last 10 years, give or take, you would have made about the same amount of money investing with Berkshire or investing in the S&P 500. Now, so what's the difference? The S&P 500 is just an index. Nobody's managing that. Okay, it's just the top 500 stocks in the stock market in the US. Warren Buffett is a smart investor, and he's got a team of smart investors, and they're working very, very hard to make the best possible return for their investors. And they still can't beat the S&P 500 over the last 10 years. Okay? They couldn't find deals that made them a lot richer than the S&P 500. Okay, here, this period was better. But overall, after 10 years, the ups and downs tend to balance out, okay? And you end up more or less at the same place. Now, if we look here, and I want to emphasize that this is not exceptional. This is the rule. Managed investments usually underperform the S&P 500. It sounds like bizarre, but paying the smart investment managers a lot of money to manage your money is usually going to give you a worse return than just blindly putting money in the S&P 500 every month. Okay, you DCA, you do your dollar cost averaging. Let's say you put $50 in every month in an index fund that mimics the S&P 500. Most of the time, you're going to end up making more money than if you paid an investment manager. Okay, it shows here certain stock subcategories were worse. About 85% of U.S. large cap stock funds underperformed the S&P 500. The second worst percentage on record, the share was 99% for large cap growth funds relative to their benchmark. So up to, depending on the sector, okay, the industry sector, up to 99% of the investment funds that are managed, so you pay these guys a percentage, okay, like 2, 3, 4, 5% of your the money that you deposit, to up to 5% of that typically goes in the pockets of those managers, and up to 99% of them screw up and can't outperform the S&P 500. So you might as well just buy the S&P 500 index fund and pay minimal fee. You take Vanguard or whatever, and that's good enough. Okay, that's good enough. And that's why what I'm saying is that Berkshire Hathaway for a long time was able to outperform the S&P 500. In the last 10 years, not so much. But at least they're not underperforming it a lot. Okay? All right. Now, what do we have here? This you might be interested in if you're interested in investing in stocks. There are only, out of the tens of thousands of investment funds that exist, okay? There are that many. Only 24 of them at the time when they wrote this survey outperformed the S&P 500. So you've got the S&P 500 here. This is a 7-year return. So the S&P 500 during that period that ended in April 2021 gave you a return of 195% for during those 7 years. Now the best fund, which is listed here, gave you 570% return during that time. So much better than the S&P 500. But it shows that there are very, very few investment managers that can manage to outperform the S&P 500 consistently. Okay, over a long period of time. And notice that they only show 7 years because most of these are there are not that many funds that outperform the S&P 500 for a very, very long time. Not that many. So so I'm putting this list in the description for those that are interested in investing in these funds. And so what this means is that overall, Warren Buffett has a good track record. Okay, if you invested since 1964, you would have made a bundle. If you invested in the last 10 years with Warren, you would have performed about the same as the S&P 500, which is good. Not great, which is good, considering that 99% of investment funds cannot do that. Okay, as you can see, only 24 managed to outperform the S&P 500. Everyone else lost money compared to the S&P 500. Isn't that spectacular? All right. So now let's compare. We've got here gold, S&P 500, and Bitcoin. Gold is down here. Gold's not doing so amazingly well between for the last 2 years. This is from January 20 to November 2021. You would have made 8% on gold, 33% on the S&P 500, so around 22% also at Berkshire Hathaway. And you would have made 520% during those last 2 years with Bitcoin for this period. Okay, so to me that's a no-brainer. The investment yield is much better. Okay, with Bitcoin long term. Obviously, if you buy it here and you're looking here, you're crying because you say, oh, I lost 50% of my... But as Warren said, if you can't handle a 50% dip, don't buy it. Okay, that applies. Okay. Now, if we started investing in Bitcoin in 2010, June 2010, this is from 2010 to June 2017. I couldn't get more recent data, but still, it gives you a good idea. This is the S&P 500. Okay, it did, I don't have the exact numbers here, but it did pretty well, considering. You see that market fluctuations long term disappear. Okay, you see this, the S&P go up and down, up and down, up and down, up and down, up and down. That's just noise. Okay, long term, it's pretty much a straight up curve. Okay. Now there's a lot more noise on Bitcoin. Okay, but still, if you invested $1,000 in 2010. Today, you'd be getting really close to 100 million, okay? I don't have the exact numbers here. I didn't do the math. But it's probably around 100 million today. So there's no other investment that outperform Bitcoin during this period. None. Okay? And personally, I think that Warren Buffett is kicking himself for not having invested here. Okay, and that's part of the resentment he has against Bitcoin. Okay, all right. So this is something, and this is the quote that I wanted to go through because it explains why he's saying what he's saying. Okay. So he says, if you set for 1% interest in all the farmland in the United States, pay our group $25 billion. He says, I'm going to write you a check this afternoon. If for $25 billion, now I own 1% of all the farmland. If you offer me 1% of all the apartment houses in the country and you want another $25 billion, I'll write you a check. It's very simple. Now, if you told me that you own all the Bitcoin in the world and you offered it to me for $25, I wouldn't take it because what would I do with it? I'd have to sell it back to you one way or another. It isn't going to do anything. The apartments are going to produce rent and the farms are going to produce food. Okay, what he's saying here is true, but it's still stupid. He doesn't understand Bitcoin. It shows the way he's saying it. Okay? It's still stupid, Warren. Wake up. What he's saying is that obviously, if you buy, a very large amount of farmland, he's saying here for $25 billion, you give me 1% of all the farmland in America, he's going to be very happy because the farmland produces food and he can sell that and make millions and millions and millions or billions of dollars of profit, okay, every year. Same thing if he were to buy, $25 billion worth of rental apartments. He would be making billions of dollars of profit every year. Now, what he's saying here makes no sense, okay? He said, if you own all the Bitcoin in the world and you offered them to me for $25, I wouldn't be able to do anything with it. And it's true. If you own all the Bitcoin in the world and no one else has Bitcoin, yeah, first of all, it's not going to be worth much because it's useless at that point. Okay, I mean, there was a point when Bitcoin started, when Satoshi Nakamoto created Bitcoin, okay, in the early days, there was probably a time where all the Bitcoin in the world was worth $25. Okay, but nobody was using it. So if nobody's using something, it's useless by definition. So by definition, what he's saying is a tautology. It's self-evident. Yes. If you own all the Bitcoin in the world, you can't do anything with it. It's same like if you own all the gold in the world and nobody else was allowed to have gold, well, that gold is useless and has no value. Okay? It's stupid. So what he's saying here is pure stupidity. So we're going to go through in detail here. Assets to have value have to deliver something to somebody, and there's only one currency that's accepted. He's talking about US dollar. You can come up with all kinds of things. We can put up Berkshire coins, but in the end, this is money. He said, holding up a $20 bill. And there's no reason in the world why the United States government is going to let Berkshire money replace theirs. So right now, he's a big fan of the US dollar, obviously, because and he's also a big fan of the American system, okay? Because he knows how to use it, and it made him extremely rich, and his investors as well. So obviously, for him, the system, the way it stands, is not broken, and it's very profitable for him and his investors. Okay? Now, what the author of this article, the article is also listed in the description here. He says here, is the issue with the U.S. government's acceptance of another currency. This of course has nothing to do with the earlier point about producing anything, as a US $20 bill doesn't produce anything either. You just have a $20 bill in your hand, doesn't do shit. Okay? So it's not, his argument doesn't hold water here. Okay? Money sitting on the table doesn't do anything. Okay? Whether it's US dollar or Bitcoin or whatever. But he seems to forget, what Warren seems to be forgetting is that Bitcoin is a currency, a cryptocurrency. Yeah, same like the US dollar. And it only has value when it delivers something to somebody. Okay? If you deliver value to someone, yes, that's helpful. Okay? So if you have a system that can bring value from one person to another person, there's value in that system, okay? And Bitcoin does that. Let's go here. All right. Let's look at some currencies as examples, okay, to compare with Bitcoin. So right now, one of the best currencies in the world right now is this black line here. That's the Swiss franc, okay? The Swiss franc has been going up pretty much for the last 45 years. It's very, very strong currency. Compare that to, here you got the Chinese yuan here, and what's this Indian rupee, that's not doing so well. Even the Canadian dollar is not doing amazing here compared to the Swiss franc. All right. Now, he said that Bitcoin produces nothing and has no legal tender in the US. Well, the Swiss franc does not produce anything by itself. The Swiss franc has increased in value over the last 4 decades compared to the US dollar. And the Swiss franc is not legal tender in the US, obviously. It's legal tender in Switzerland. Okay? So, right now the Bitcoin is not legal tender in the United States, except in some states. It's legal tender, I think, in Utah, and I think maybe Wyoming. I think Wyoming is trying to make it legal tender. There's a few places in the U.S. right now, a few states. At the state level, some states are considering making Bitcoin legal tender. Now we've got El Salvador that made it legal tender, and there's some other countries right now that are progressing towards that end as well. So I think eventually a lot of countries are going to use Bitcoin as legal tender, and at least some states in the U.S. as well, if not the federal government in the U.S. So again, his argument doesn't work very well here. And also, just think, okay, he was talking about, having US dollars and they were better than Bitcoin. But if your US dollars are just sitting there not earning income, they're useless. And that's why you have to use your US dollars to buy real estate or buy farmland or whatever, so that they become a productive asset. But the currency itself is never a productive asset like that until it's invested into something, okay? So as you can see here, Bitcoin did not produce anything either. Bitcoin has increased in value with the US in the past decade. And it's not legal tender in the US, so same as Swiss francs. So, his argument makes no sense. Very stupid. Again, Warren, wake up. It's stupid what you're saying, okay? And you see, he likes to have a large racket. Now, this is another one that I like, another quotation that's very interesting. Anyway, here. In my life, I try to avoid things that are stupid and evil. I remember this word. And make me look bad in comparison to somebody else. And Bitcoin does all three. In the first place, it's stupid because it's still likely to go to zero. I don't know why he thinks that. It's evil because it undermines the Federal Reserve System. That's very important. I'm going to spend a few minutes talking about the Federal Reserve System. And third, makes us look foolish compared to the communist leaders in China. He was smart enough to ban Bitcoin in China. I think it's making him look foolish because he didn't invest in it early enough, and today it's worth $1 trillion. Okay, he missed out on $1 trillion deal. And I think that's the truth, to be honest. Now, when it says it undermines the Federal Reserve System, yes, and that's what we want. Federal Reserve System is not a very good thing, okay? And I'm going to show you what I mean here. So we saw this, sorry. This guy is Alan Greenspan. He was the chairman of the Federal Reserve System in the United States for the longest time in history. He was about 20 years in that position. He was sworn in by Ronald Reagan and left only in 2006. He retired in 2006. And this guy is a very smart man. And believe it or not, he hates the Federal Reserve. This is the most ironic thing ever. This guy is an economist, okay? He was hired by the government to fix the problems, okay, at the Federal Reserve, okay? And he stayed there the longest. He stayed there about 20 years. And the guy wrote extensively about how much he hated the Federal Reserve System. Can you believe it? You can't make this stuff up. So this is him a little bit younger. He's quite old now. He's like, what, 98? Something like that. Anyway, yeah, so he was in office from 1987 to 2006, believe it or not. He wrote, he was a big fan of Ayn Rand. I don't know if you guys are familiar with her, but she's like the archetype of the philosophical capitalist, okay? She wrote several novels and books explaining why capitalism is the best thing in the world. Okay, she created a philosophical system called objectivism, and Alan Greenspan was a devout objectivist. Okay, and he wrote articles for the objectivism newsletter, and so on. So we're going to show you a look at this. Now, what I wanted to show you here is Alan Greenspan. These are the United States budget deficits, okay, since 1929. And during the time when Alan Greenspan was in power, well, right over here, he was here from 87 to 2006. Well, you had the longest period with a budget surplus in the United States, amazingly. Eh? Now, forget about these surpluses. This was the period when Bill Clinton was in power. Okay? Now, we haven't seen numbers like that in a while. And the deficits are bigger than ever now. So he did, while he hated the Federal Reserve System, and while a lot of people criticize his policies, They said he was too liberal in issuing money and all kinds of things. I think he had a head on his shoulders, and I think he probably did more good than bad during his very long tenure. Now, if we look at this, this is a quote from Alan Greenspan. It says here, to borrow an invaluable metaphor from Alan Greenspan, if under laissez-faire, the banking system and the principles controlling the availability of funds act as a fuse that prevents a blowout of the economy, then the government, through the Federal Reserve System, puts a penny in the fuse box. The result was the explosion known as the crash of 1929. So basically, he's blaming the crash of 1929 on the Federal Reserve System, which short-circuited the fuse box, okay? Because he says, laissez-faire economy, laissez-faire means let it go, okay? Don't intervene. Don't put your big fat government hands on the economy. Let the economy run itself, okay? Because there's going to be periods of growth and there's going to be periods of recession, and that's normal. There's cycles. It's a little bit like the summer, spring, the spring, summer, fall, and winter, and it comes up as a cycle like this, and the economy is a bit like that. That's what they say, okay? So Alan Greenspan was convinced that the Federal Reserve System screwed up the economy in 1929. And I'm guessing that when they actually put him in power, he said, I'm going to try to avoid that. It kind of worked and kind of failed at the same time. He was there for a very, very long time, okay? So I cannot blame everything that happened in 2008 because he left 2 years before that. But some of the stuff that he did prior to the crash of 2008 was linked, okay? We're going to explain that a little bit later. All right. So, this, for those that are interested, if you go to Amazon and look at Ayn Rand, Capitalism, the Unknown Ideal, you're going to see articles written by these fine people, including Alan Greenspan right here. Okay? It's very enlightening if you're interested in capitalism and you want to see it from a very philosophical perspective. Okay? How they explain how ethical pure capitalism is compared to socialism and compared to government intervention and so on. Okay, I'm not saying they're right 100% of the time, but it's an interesting point of view. All right, so to show why I'm saying that Warren Buffett is wrong and stupid, okay, you have to look at how Bitcoin is useful. The Bitcoin network processed an estimated average of $489 billion in transactions per quarter in 2021, compared to PayPal's average of 302 billion. So just the number of transactions, okay, the number of funds that are circulating through the Bitcoin network is already greater than all the transactions done by PayPal. And I'm pretty sure that in a few years, it's going to be greater than Visa and MasterCard and all the credit cards combined. It's going to become the main way for people to transmit money. Not through the traditional Bitcoin network, mind you. It's going to be through the Lightning Network. So if we look at it here, this is the traditional Bitcoin here. It says Bitcoin processes 4.6 transactions per second. Visa does around 1,700 transactions per second on average. That's not quite the full picture. If you look at the Bitcoin Lightning Network, which is like a layer 2 over Bitcoin, it can achieve 1 million transactions per second at a very, very, very minimal cost. Which means you could send like 50 cents or $1 to your friend because, you owed him a bottle of soda or whatever, okay? So you can do microtransactions with Bitcoin through the Lightning Network now, which is a lot better than, it's even better than cash. Okay, it's faster than cash. Your friend doesn't have to be with you in the same room so that you have to pay him or her. You can just send whatever amount you need to send to your friend to pay back like let's say you're splitting lunch or something, you need to pay $3.52. Well, okay, all right. Just send through wallet to wallet. You don't need a bank for this. You don't need the Federal Reserve for this. Okay, you don't need any intermediary for this. It's straight through the Lightning Network, and you just paid a very tiny network fee. Okay, and it's instant. That's why it's called Lightning. It takes seconds, okay, to do anything. So what I'm seeing is growth on the Bitcoin network. More and more and more and more utility. Okay, if you know anything about the blockchain, if you understand how Bitcoin and the Lightning Network work and operate, which Warren and Charlie do not, apparently, you see that the utility is going to increase exponentially. Okay? Millions of people are going to be using the Lightning Network very, very soon. Okay? Especially because Twitter now is on board with the Lightning Network. You're going to be able to send transactions to any Twitter account, okay, instantly. And Twitter is just the beginning. You're going to see that on several other social platforms. You're going to be able to send money by email to your friends and so on. Or instant messaging or whatever. Okay, it's going to be 1,000,000 times more useful than it is right now. Okay, in a matter of a couple of years, you're going to see that everybody is going to be transacting using the Lightning Network because it's so fast, it's so cheap, and that will increase Bitcoin's utility. And that's why I'm very, very bullish on Bitcoin, despite the fact that right now we're having a market downturn. But as Warren said, don't invest if you cannot handle a 50% dip. These are the very good things that Warren said. But when it comes to Bitcoin, he's out of it. Okay, he's out of his depth. Maybe he's going to wake up to it, but well, he's a little bit old now. So maybe by the time he reaches 100, maybe he's going to realize, oh my God, I missed the boat on Bitcoin. But I think he's going to realize that the future is in cryptocurrency at some point or another. Okay. All right. So that's it for this very long video. If you like this kind of stuff, please like and subscribe. Don't forget to ring the bell. Download the free book where I explain investment strategies for free. And all you have to do is put your name, your email address, and hit the submit button. If you don't, and you're going to get a big fat button that says download the free book. If you miss that button, don't worry. We're going to send you an email with another big fat button that says download the free book. And if you don't want to download the free book, that's okay. You go to Amazon, you pay $5.99 to Jeff Bezos, and Jeff sends me $1. See ya.